Hello, good morning. Welcome to another ES Futures trading stream. Today is Tuesday, April 23rd. It is 9:17 Eastern Time in the US. All right. Let's take a look at what the indices are doing. Yesterday, the Dow was the one that has the better odds of having some sort of rally, particularly having these highs like 1, 2, 3, 4, even 5 highs, selling from exactly or pretty much the 100 SMA. At the same time, we had the 5,000 in the ES, the 100 really close, and a movement to the downside that has take about 6%, right? Around 6% of the rally of the all-time highs here. Nasdaq had a very weak, right, very questionable high the previous day, right from the 100. These two markets, in my opinion, especially this one, has good odds of having some sort of rally. And at the end, now as the day developed, this is the intraday, Nasdaq was the only one who had an inside day, right? Had an inside day. The Dow gave us the rally after 4 or 5 periods. And the ES has taken back the 5% pullback, which was really close to the previous day high as well. There is some level of weakness now in this market in the ES because the pullback low, we have a trending day yesterday, which for me also was a continuation of this day here. This is Friday. This is the overnight inventory for Friday in the ES, and the daily session really looked like a counteraction to overnight inventory. The whole session looked like it was that. Once this inventory was dealt with, then we have something that comes off out of this, which is what we had yesterday. In hindsight, of course, everything is easy, right? We can, in real time, when we do this in real time, we can just speculate. After we see, well, we may have something more clear or can be more confident in our opinions. The opening, this was the second week in a row that we have a kind of like a strong opening, but I didn't like here. I didn't see this, but I can see the market opening up here and having a break, right? I think this part is how many points this is, like 4 or 5, like 6, 8 points. This kind of break, if you had an opening and then a rally and then come back, that's another story. That's for the indices, right? Now, what can we see here today? The ES has closed the gap, is buying pretty much from the 100, and it is, it have good odds here, it makes me wonder something here. Are we witnessing a potential formation range here? Can this be a range you have, because 1, 2, 3, 4, 5 days, a little bit higher today, and that will give us a 6-day range. Is that what we have? No. Now we have a trend line here. This trend line here. What I'm going to do, I'm going to move this one over here. Look at that, right? We have something here, and today, if I use this trend line, will give us the 66 level as a potential high. $50.56. What do we have around the 50.66? Okay, what is there? 50.66. What is there? Okay, look at that, right? This is a previous all-time high. Was also weak low, and now it's support resistance. And why I call that support resistance? If I use my daily charts, okay, it's this high here. I will have this high here. 63 is in this case 63. It was 66 here. 63 is this one. You got the idea. The area between 60 and 70, you can call it 65 maybe, if you don't want to be that exact in the weekly time frame. And why that? Because how the market was moving during this rally, every time the market had a breakout, make a high, that high was tested, right? Make a high, had tested. Make a high, tested. Make a high, breakout, tested, right? And the next time, I don't bother to test that high again. I'm going to buy before that. And when that happens, guess what? The market moves in the opposite direction. And something that I saw here, the market looking for some sort of support at every single level. The market was stopping. Hey, yeah, how are you doing, my friend? Market is stopping at every single level that can be used as support and failing. It bought from here and failed. It bought from here and failed. It was bought from these two and failed. It was bought from these two and failed. And now, okay, what's the next one? We have another weekly low here. And this one is even bigger than these two, right? This one, and this one. Because we have have a tree here. And two more here, and two more here, and finally this one here, all right? What's the level of this? 4,500. If we check the monthly, that brings the market back inside this range, way below the previous yearly high. Is that going to happen? I'm not saying that's going to happen, but something big has to happen for the market to come back all the way down to here, right? Because this is a range, the last range the market has, and the breakout that come after this. Now, I was checking, if you check the news, if you check the experts, what the talking heads are saying, the same thing they were saying when the market was having this rally here. I remember when that happened down here. Every time the market has this rally, every 10 years ago, it has a 2% rally and then continues the movement to the downside. Now they are saying the same thing, right? In the opposite direction, right? Every 4 or 5 years, the rally has a pullback and then continues going higher. That's the talk now. Also, something that I read over there is somebody was talking about, the only thing that this market has for a rally is a positive catalyst. There is some sort of expectation now, hope that something good will come out of nowhere and will take the market way back, up here and make new highs. Don't take me wrong, but this is a non-excess high, right? This is a non-excess high. The action to the upside has not been completed, but it looks really elongated. I'm not saying that that will not happen. right? What are the odds, right? I'm not going to trade based on what I think will happen, but rather what it is happening now, right? What it is happening now. I can see here, market buying from the 5,000, very mechanical level here. If I check my daily time frame, I mean my profile charts, the pullback, we have double distribution, something that I like to see when we have an upside. Because there is something here, right? The market forms two distributions. This is the close of the distributions, and this is the low of the distributions. But what happened here? The pullback low, the late pullback low we had, is exactly to halfback. This is halfback here. Notice it's just one tick from halfback here. Very, very questionable here. And we don't have excess here. We don't have excess on the high. We do have excess at the low, and barely technical excess down here. We have excess on the lower side. Not as good, right? But there is something there. And the action, what was happening here? The action, nothing has changed in the way how this market is being traded. Very technical, systematic buying, systematic selling coming from halfbacks, very mechanical trading. Very short, which is an indication of short-term trading or traders dominating the market. I was also checking yesterday what we have here. This break here actually had pretty decent volume, right? And why I say is good volume or decent volume? It is always relative to something, right? If I check this and check, for example, what happened during this rally, I can see there is some difference here, for example, right? There's some difference here and some difference here. All right? Volume increasing here as well. And the volume going higher during these breaks. If we have a rally here in the weekly, if this is very low, that would be very bad for that specific movement to the upside, because that is more an indication of some rebalancing than a serious pivot there. And I am not trying to say that this will happen, the other or this other thing will happen, because I'm very neutral here. Anything can happen, and we also have really big events that are coming here. We have a lot of tech that has earnings scheduled for this week, starting today with Tesla after the close. All right, markets are open. I do not have any preference for any market today. I will have here really, I will have the Nasdaq on one side. We have an inside day in Nasdaq, okay? Inside day in Nasdaq. Balance guidelines, it's really nice inside day has printed in Nasdaq. Okay, go with the breakout of any sort of balance. Inside bars are a form of balance. Fade the breakout that fails. Overnight inventory, I have settled, well settled. Settled is kind of like about this area here. Let's put settled around that area. And the ESR is around that. I'm using window trader settled, not the official, which is not the official. All right. Overnight inventory is, I would consider maybe balanced. Same thing goes with with ES. The 66, okay, we have a breakout in Nasdaq. I'm not doing anything here. Let's see how it tests, how this low, his high is tested. This is the high of the trend. The 66 is the high of the trend in the ES. This is what I mean with that. What the heck? You know, if I move this trend line over here, I got that high, right in the trend. Okay? So, the way how this market has been traded, there is some selling that may come right from that level. Okay, buying is coming from this high. The support is being also there is something in the ES is the market is back inside March monthly range. Okay, the market is coming back into previous month range. By doing so, okay, if there is some values accumulated here, it can actually target the opposite side of that range. Okay, but we are right there, right in balance. Okay, this is a big pullback in this market. There's a big one here. Buying from the opening. That's a big one. The market has come back inside previous day range. That's not a good sign for a rally here. The market got out of balance. It's buying from previous day range. I mean from the opening again. The Dow is inside previous day range. The Dow also was bought from the breakout. That doesn't spell good things from that market. They may need some and look at the overnight in the Dow here. How many times was bought from this level, right? Very, I mean, inventory is long here and in weak hands in that market. You know, a serious buying here will not come back inside. Once, will not come back inside here. Second, it will not be bought from the opening. Okay, this is one sign of weakness here of this rally. Oh, this is not a reference here anymore. Support can be something there. It is attempting a con. I don't. Let's open it. Let's open this thing and see. Oh yeah, this inventory is long actually. Oh, what about this? Yeah, this inventory is sort of long. My bad. It's not. It's not as much as was yesterday. Or yesterday? Was yesterday or 2 days? 2 days ago. 2 days ago, not yesterday, but Friday. Let's keep watching this thing here. 8 minutes into the first period. Let's see, this market can take this high again. No, it's not a good. This is something I don't like to see. Doesn't spell good. This is a breakout, right? This is a breakout of the inside bar. Go with the breakout of the inside bar. It's right there. Let's see if there is something here to the upside. Very questionable here. Something that can be a reference to the upside can be this closing these distributions from this day, which is Friday, Thursday, Wednesday last week here, and which is also very close. You know, it can be the 5100 as well. There is nothing here. There's nothing here in the upside. If there is any, which means that any serious movement to the upside should have no issues going through this area here, going through this part of this day, and also through this, and of course through this one as well. You know, there's nothing here, nothing here, nothing here, nothing here. Most of the volume in this day is way down here. This day is also over here. This one down here. You know, wow, this is something interesting here. TPOs coincide with volume here. So, this is what I'm talking about. You know, the value area, the TPO, the wider TPO is coincide with the volume, you know, which means that traders that see, no, here it doesn't, right? We have higher volume here, I mean TPO here, but volume is down here, right? Which, you know, traders that saw that use volume profiles will see that, you know, will be in harmony with traders that use market profiles. I use market profile, but I am not a market profile trader. I want to see if this market has makes an attempt to do any kind of correction to this pullback here. As long as this pullback remains, you know, this is an important reference for today. This is the correction. You know, this is a rally and this is a correction of this. This is a rebalancing of this overnight, this inventory, right? This rally. There's a rebalancing that happens here. I was kind of like expecting some kind of like dual market today, some back and forth or rotational market, and you know, in expectation to what may happen after the close with Tesla. Market. Let's see if this market can take this high today. I mean, with this movement. Okay. Let's see if there is some extension here, Remember, there's nothing here. During this day, there's nothing here. All right, there we have something. Here we go. Nice. You may guess what kind of position do we have now. I have more my stop here. I don't want to risk anything here. I am playing short covering here. Short covering has to move fast, all the way up to here. We have a 100 here. All right. I am out. What I play here is the go with the breakout of the inside bar. Openings. I don't trade openings that often, right? But I saw something here, right? But I don't like the way how this is happening. It doesn't mean it cannot go higher, or it doesn't mean it cannot have a huge range extension. It doesn't mean that. But what I'm trying to say is, if I got anything here, I am going to be really, really nimble to move my stops if it's profitable right away, to take profits, to not let the market come back too much against me. Notice, if I got long here, where the market is right now, for example, right? It's way back here, and all of that because of what I've seen before here. It doesn't mean it cannot be bought again. This is another. It can be another. I mean, the same trade can be placed here. You have location. What's my exit? For example, right? My exit can be this. Coming back inside this range, that's an out. The main thing here, I don't know if what I'm doing here is fine for people or for you, because you can get a bias here, right? You can try to copy what I'm doing, and that's the last thing I want you to do, man. You need to have your own trade. Look at the volatility that this market is having, right? This one in particular. Right? Did you see what happens? Right? It came all the way down to here, and boom, in one movement you have like 20, 30 something points. PMI. Based on news, PMI news. There. Look at that, man. You need to have your own opinions. That's the thing, right? I don't know what the number is, but it's PMI. We have PMI today. Whoa, this is short covering. That kind of movement, that's short covering, man. Traders are being crushed here. I mean, really. This is a short covering day. This was a good entry again. Unfortunately, I didn't take it. No, I didn't like what the market was doing. Okay, and this is one of those occasions where, okay, I missed the trade. All right, I missed it. Right? So what? Right? Market will give us opportunity. And now what I am seeing here is, can this be a short covering? Right? It has all the marks of short covering. And notice where has been selling from. It was just a couple of ticks from closing the gap. Just a couple of ticks from closing the gaps. The way how this market moved, that's the way how short covering is. It just got zoom. One movement after another. And now Nasdaq is also right at the 100 moving average. Right here. Right at this moment. Which is an area which the traders see as a value area. An area where to take profits, right? And areas to go long and areas to go short, right? If you have something here, just that's it. That's it. I talk about the Dow today. This being super long. I mean, very really long, risky longs here, but the market didn't take that low. This low, can you say? It didn't. It is still. This market is still in an inside day. It seemed to me like yesterday Nasdaq was moving in sympathy with these other markets. What happened with Nasdaq? And let me tell this again. This kind of actions, Nasdaq can give you profits really fast, really quick. That's what attracts traders here, right? Traders that follow price, follow money, but also it can kill you really fast. You can make good money or good profits, but it can take away really fast as well. And if you don't change, you are not able to change your mind right away, it is going to be painful to trade this market. I didn't like the way how this, actually I don't like how the market traded down here in this area. Bought from this level, it was bought two times before the news. What happened in that news was, I don't know if it was good or bad, right? But that was a catalytic here for this short covering here. Now, if there is momentum, traders have a tendency to pile after they see a movement, right? Now let's see if this market can sustain momentum and come back inside this range. For example, if this is a huge area here where volume will have volume here on the upper side. You notice now there is something that I am doing different today, right? Maybe you have noticed this, and also yesterday. I'm watching another markets. I'm watching Nasdaq. Yesterday I did some trades in the Dow. I didn't do anything here in the ES. In the morning, not in the morning, midday in the Dow. I was kind of like mad, pissed on myself yesterday because I decided to go short the weakest market. I decided to short Nasdaq. What happened somewhere in here? Because I saw that that market as a rotational. Ooh, the Russell is having a big rally, man. Look at this. Russell is having, this is a strong here. You know, single printing its way out of previous day range. You know. Same thing happening with the ES. Same thing happening with Nasdaq as well. Now the Dow is the weakest one, but the face period hasn't closed it yet. What I was saying, I decided to short Nasdaq, but I shorted when I see this movement somewhere down. When was that? I was too zoomed in. I don't know what. Oh, I shorted here. In M? No. I had this open too. Here. For some reason, I don't know. I don't remember where it was. Is this Nasdaq? Oh, I guess Settle is right here. I don't remember now how I play. I guess I was checking the dailies. Yeah, you have the dailies, Nasdaq. Man, I don't know, man. I guess I was lucky yesterday. Huh. I guess it was somewhere in here. I guess I was checking this level from here. I don't know why I was checking this level. Market came back here and was bought. And the thing is, my play was taking this low. I was bought exactly. I took a hit here, close it, but re-enter. The next time I re-enter up here. And as soon as this level was taken, I started to cover here, all the way down to here. But why I was mad, because I didn't, that was a bad trade. It was positive, but was a bad trade. It was a bad trade because I, I, I lost perspective here. And I was not in sync with this market. I really got lucky here yesterday. You know, and those are the risks that we take, right? We got to assess. We got to assess the outcome, and not the outcome, but the decision process, right? And my decision process was very poor yesterday, very poor, very bad. I shouldn't have done that to begin with. Yeah, I should have kept myself out of that market and done anything. Just keep what I had from my midday trades, and that's it, right? That was supposed to be it, right? But as I say, I guess I got lucky. Um, the one thing that I can recover, or I can, you know, do as positive is I didn't let the previous the outcome of the previous trades, you know, because I took like 3 trades, to all them to the downside. And I watched the auction. Yeah, I watched the auction here. What was happening here? And when it was bought exact, I think it was the one. There was some kind of moving up. I think it was the 100. It was up here. It was something very significant reference that I've used. And when I saw it was bought from there, the next time I went short right there. But there, it has a really big rally after that, and I closed before. Closed it right away, right, for a loss. But I re-entered higher. I re-entered somewhere. I don't remember. It was M, man. I think it was L, maybe. I guess I was short here. I re-entered. I don't remember that now. But the process was. Uh, the process wasn't good. That wasn't good. That I can say. It wasn't good. All right, market is out of balance. The ES is out of balance. This is the second day in a row. We're trending higher. Now there is change in this market. Now I want to see if there's potential here of forming a 6-day range, right? This is the opposite side. This can be the high of this range, or the potential range in this information. Settings, 66 days, that's too much. Let's do 20 days. So I can put here all this. All right, the gap has been closed, you know, buy the dips day here. I hate when this happens. You know, this is duplicating what I have, is duplicating it here. I don't like that. I really don't like that. Now it's, ugh. Now the gap has been closed here. This level here was a weak intraday level from this day. This one. Now this one has been corrected. What is left? I remember something like that from yesterday. This one, and I didn't do this. I didn't do this one here in the lower side, From this, all this movement, this is from, this is something I've noticed yesterday. The market was trading, moving within these two references here. Now this has been repaired. Something else I was checking today is regarding a big tech, because this is a big tech week. There was huge here. Apple, for example, has taken this key level here again. Netflix, which was the first one that had earnings, has removed all of this inventory, man. All of this inventory has been removed. I wonder, we have Tesla. I wonder what can happen with Meta here. All of this inventory is super long here. This can be a risky here also. We have a big gap here. This market is being bought from the higher the gap. Not a good sign as well. Right? Look at Tesla. What do we have Tesla? Tesla is super short now. Tesla is super short, right? There's a lot of inventory, short inventory. Look at these highs we have here. Look at these highs here. Well, that can be this can move the market way up here, right? Even up here. This kind of environment. I'm not saying that's going to happen. What happened is, this is very short here. I don't know what happened. I always thought that Tesla fair price is, for me, maybe 50, 60 bucks. That would be a really good price for Tesla. Notice what's happening in Tesla, for example. All last year. How much is this? 80, 90% retracement from the past 2 years? A year and a half, basically, right? Very close to this though. And when the market was here, when this market got down here, it was being hammered, man. Really bad, right? I think $50 is, that's why I have this 60, say 63, 50 is a really good price for this market. After all, Elon has sold a lot of his stocks as well. He's a very smart guy to trade, to deal with, to sell. He's curious, right? How traders love when he sells, right? He makes it look like it's a good thing selling. When when he's selling, retail is buying like crazy. That's a really nice way to sell, right? That's the best thing that can happen to him. Nvidia has taken the 50. Notice where this day started, the selling started buying from here, selling from here. Now this high can be tested. This gap has been closed. Getting close to this big gap as well, significant gap, but this is still a decent amount of gains for the year. Significant retracement as well, maybe like 30-40%, something like that. Microsoft has already had a break. It's ready for a rally, ready for a break. It can go in either direction here. Same thing for Amazon. Kind of like a ride at this key level here. Big gap down here. Same, Amazon and Google are trading the same way. Amazon, Google, and Microsoft actually. All right. There's no excess here in the Dow from yesterday. This low has not been taken. We have a downside action that has ended today at the opening. Same goes for the ES. Same goes for Nasdaq. That's why I keep this I have this mark here. Trading is about change, right? If something changes, we see the market taking this low and trading lower here, which makes the day as an inside day here. Now, this now seems or looks like a pullback. No? We have a rally, pullback, and then we have continuation. Okay? Now, Nasdaq has come back inside the 2-day range. It hasn't come back inside this range. The movement that's happening here is weak. Now, I guess I'm going to focus now. I believe I have, oh, come on, man, look at this. Look at where Halbach is. Hey, Halbach is right at previous day high here. This is not good because traders have a tendency to buy from these levels, but this time another time frames can join here, right? We have short-term, very short time frame traders here, plus another ones that buy from this breakout, daily breakout here. I had my trades. I got this. I'm not doing anything now. After this, I took a hit fields here. Did I? Yeah. The first time I went long here. No, actually, I went short. I took a short when the market re-entered this. It went somewhere around here. They could get back inside the range. Was being bought from the high, then bought from over. I didn't see it was bought from, but what I saw was buying from opening, and I shorted somewhere down here. As soon as the market get back to the opening, to and through the opening, which is this green point here, I let it go. I took a hit there, and then I went long when it takes this high here. And then you see some movement, some quick movement to the upside, right? And because the way how it was trading, I just let it go. And the next thing I know, the market came back right to this level again when we talk about, okay, this can be a good entry, another entry. But we had news, right? We have PMI. As I say, one of my rules is do not re-enter a trade that I had got out from, right? Once one trade is done, let's move on to the next one, okay? And the next one has its own context. It has to have its own context, okay? Because the first trade is over. I'm not going to use the context for the first one that I use for the first one for the second one. That will be falling into the category of no traders do what works until it doesn't work anymore, right? But sometimes when it doesn't work, it can take away all what you have gotten, you have earned. I have a bias here. I'm looking to the upside. Value is higher. Very questionable. I know this this has stopped just short from taking this high, right? Same thing. It is the same thing that's happening here. This same kind of. I saw something like that. I guess it was in Nasdaq or the Dow. I don't remember which one was. This is another thing, right? Traders move from one market to another. The ES, as Jim says, is a more efficient market. All right. It requires to be very patient. It requires a lot of time observing the market. And I don't like to use this word quote unquote setups, but it takes time, to set up, right? It takes 3, 4, 5 periods at least to see something here. In the same way how you can see something developing in the intraday, the same thing happens in the daily as well, right? 4 or 5 periods intraday, 4 or 5 days, for example, for the daily time frame. 1, 2, 3, 4, 5. We have a break here and a potential range here, right? If this is a range and this is an scenario, right, in that potential scenario developing here, if there is a formation or range here, 6-day formation, 6-day range, what can be the potential destination of any movement to the upside today? It can be this high here, right? Which we talk in the morning, which also is support. I mean, in this case, is resistance now, and it's very close to the 5100 as well. My trades, it's really hard to do this. It's really hard to do. I knew I took a hit here. How much? I don't know. I know that I have a better trade to the upside. I know I have a better trade. How much it was? I have no idea. I don't want to check that. I just know it was good. I will check at the end. I will check at the end of the day. I don't want to get a bias here. Something that I like to observe is it happens over and over is when we have this kind of movements, for example. This is the first 7 minutes, okay? The extension, the upside extension is happening kind of like at the end of the first 7, right? It's how these markets extend the range to move, in this case, half back. I would see if this moves higher, has to move maybe all the way up to here, very close to this high, and move half back to this low before it has some selling, for example, right? Some profit taking, some rebalancing that happen around those levels. I feel better today. I am better rested. Yesterday I was very tired. After the stream was over, I just went back to sleep and woke up, kind of like come back to the market. And as soon as I come back to the market, there's something here. There can be something here. Now notice what is happening in this market. We have an upside day. The days to the upside. Now, how healthy this rally is. It came back a couple times inside this range. Now we have a 2-day range. You have a breakout of 2-day range here. But it's coming back a couple times. Get above, come back, get above, come back. I don't want to short. I'm not saying I'm going to be short. I don't want to short a market that is having momentum to the upside. This is a breakout. No? It had a breakout of the inside bar. That is one trade. Now it is a breakout of a 2-day balance. Okay. Now balance guidelines apply here now. Okay. Markets getting out of balance can give us some opportunities. In this case, to the upside. In Nasdaq, if the market falls back into the balance, that's another thing, right? But balance guidelines apply. I'm using balance guidelines for these markets to observe the market. It doesn't mean I am trading. I'm just observing this, taking notes what's happening here. Okay. This market open at the upside. I notice something here. This market can break all the way down, all the way down to the 100 moving average down here. Okay, and still be an upside day. Okay, as long as this low is not taken, this is an upside day. Now I have 3 moving up, 3 100. So why I do have that? Some. Okay, I got 49.81 is one. Oh, This is not. Oh, this just moved. This is now 41, now 81. It's way up here now. I'm going to erase this because traders are focusing more in the developing moving average. The adjusted, what is the adjusted? Maybe the adjusted is, what is the adjusted? The adjusted is 50-15. Alright, this one. 50-50 is up here now. Okay. This is a reference. This low, we have an excess here, but I am labeling this low as a weak because it was bought exactly from the 100 moving average. Not a good low here. Very questionable low. No excess. Good odds the market is going to take this high out. Notice how it dries, volume dries. The pullback doesn't attract sellers here. Well, having upside continuation, huh? This breakout. This is why I don't like I don't like the Nasdaq. Look at that. You know, look at that. There's just too much volatility. It's too thin. This market is too thin, man. Notice what happened. Notice the upside extension, right? The upside, how this market has extended. Halfback was moved to the low of this period, and then we have some selling that comes from that. It doesn't mean I'm going to sell. I want to do that, right? That can be some sort of programs there that are programs somebody just, you know, build how this algorithmic the both people call these algos, right? Algo trading, but the algos don't create algos, right? There are programs, there are people there. There are some hedge fund managers or whatever, people that manage money, that hires programmers to do, you know, they hire a coder and build me this program. I want to have something that buys here and sells when this happens, right? And then the programmer do his job, and then boom, we have this. And that's why I call this systematic. And this is one of the reasons I call this systematic trading here. In this case, see, very systematic buying. The same thing happened in the lower side. It's going to identify what can be going on behind the movement. Is that what is happening? I have no idea. I am just speculating here. You know, I will never know that. I will never know that. This market is very tricky here. It's very weak. The buying that's happening is very weak, but so was the selling. We have seen techs. Tech was really short, very short as well. They have many of them are actually poised for a rally here. Or some sort of really virulent movement, right, after the earnings. Okay, it's 10:15. If you have any questions, please let me know, or comments, right? Hey Sam, if you are there, just have a reply from this guy, from this friend. He doesn't have Sierra anymore, but he's going to ask some of his friends if they have Sierra, if they can share. I'll let you know. The Dow is printing an inside bar this period. It doesn't look good though. 17 minutes. Yeah, I should see some sort of, what I'm watching here. It is 17 minutes. This market should be up here. Trying to have some upside extension of this range. It's not doing that. I am monitoring that. And now the thing is, all the other markets, all the other indices are having days, upside days here. The way how this market trades, I have here it from other people or traders that trade similar to the ES, and that's true. It does. No, what I mean here is what I tested here. It doesn't mean if this is going higher, this is going to be higher as well. But the way how they trade, okay, the way how they trade is very similar to the ES. These two markets are similar. The way how they trade, not the movements the market is having. Yesterday, for example, we have a very similar break, rally, pullback, break, rally, pullback. Well, so the Nasdaq as well. Break, rally, pullback. And Russell was different. Russell is completely different as well. I don't trade this market. It's a small cap market. I think this is very risky though. Because I guess 1 point here is the same has the same value as the ES, but it's very, very thin. Even thinner than Nasdaq. Way thinner than Nasdaq. Okay, non-excess high cannot be taken. It's having hard times taking this high out. Nasdaq is coming back inside, but notice what is happening, right? It's trading back and forth around this moving average, around the 100. And I have these numbers from my daily charts. And this is just to monitor. Okay? To monitor. Look at where this market is, right on this high, right? It was sold before. There will be some selling here. Once the sellers are taking, there will be some buying. Which one is going to prevail? Have no idea. Now this trend line has been taken. Okay. Which is this. I am using the same way that I had here. I move it a little bit higher towards these highs here. And this one, now, what was being used to buy, to sell, now is being used to buy. Very, very technical trading going on here. Notice where the Russell is, right? Riots is 100 here as well. How much is that 100? How much is that? Let's call it 2014. So I'm going to put here 2014. This is 100 moving average. Let's also this on the left, and this is on the right. Okay. Oh, my bad. On the right. So I have this level here, which is, I just moved that reference from this chart, which is the daily. I could use the 200, but it's too far from where we are right now. And the 50 is also way too high from where it is now. Right? This can be a potential destination of the current movement, for example, right? There are more small, bigger time frame traders, investors pay attention to these moving averages, and retail, small trading. The smaller the trader, the smaller the moving average. You know, there are traders, retail trade the 5, the 10, the 20 moving average. Not to trade from those levels, but to see, to use the level as a reference. Same ways as I use saddle, as I use last, those areas, those are just references. I don't trade out for those numbers. Now, is this a trending day? Is this going to be a trending day? Is this going to be a short covering day? You know, I have those two potential scenarios, right? Two potential days that are forming. Or rotational? Who knows? You know, why I say short covering day, because what happened here, the way how this upside movement happened, you know, it was just boom, 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 boom. That's short covering. You know? And the characteristic of short covering is we have a steam and then rotation after that. That's short covering. That's the way how short covering happens. Huh? Now it is not going as fast now as it was here. Notice how tempo has decreased here. Volume, we have some increase of volume and a very nice slow increase in volume, right? We have it here a little bit higher. It may end up something like this. Is this highest in the last 10 days? No. This is actually kind of like no good, no bad. Kind of like in the good side, close to these highest. But also, let's check how this. What kind of volume are we having now? Oops. I guess a good volume will be somewhere up here. You know, above maybe 4.7 millions or 5. That would be really good. But now down here, kind of like in the lower side, right? Below. Okay, let's call. And this is always relative, right? Always relative. Below 4, I'm going to call it normal to low volume. Okay, why? Just because I can, I believe. You may have another opinion that can be as good as mine, right? This is just based on observation. This market has, man, this is really there. I have the impression that these markets are waiting, just waiting for, I need to hold whatever is happening here until earnings come, right? The market may have seen this high, and there can be a breakout of this high towards this level, depending on Tesla. That's one scenario. Depending how Tesla reports, also, if the market comes down here, it can be followed with a huge break. Upside continuation, okay? I don't want to short the market that's trending high. Pay attention to the auction here. What matters is the auction, okay? Look at this, what is happening here. Going higher, going lower, pull back. That's what's matter. Right? That's the first thing we need to. Learn. But unfortunately, it is the last one we learn because it comes with experience. First, we focus on these levels, right? On these references. Okay, value area high, value area low, POC, gaps, overnight high, overnight held back, overnight POC. Oh, you notice this? Huh. This is a prominent overnight POC, has not been checked or something, right? And that's the first thing we learn. We should learn another thing, but it's the first thing we learn. The really nice movement this market is having. Now, how to switch your brain, right? How to switch your brain from selling rallies to buying pullbacks here. Because that's what happened. You know, this market is not trending lower anymore. Yesterday, that was the end of the downside action, or the night. That was yesterday. One time frame lower ended. Markets don't go from trending lower to trending higher. There is usually some sort of range that happens before doing that. And that's what I'm trying to find here, to figure out here. If this is going to form a range or some kind of step in the process of the break, or it can be a range that is going to forecast up a rally. Because remember what we have at the highs, and a lot of these highs. This is weak, for example. The next high is also weak. This is weak high, coming from exactly half back here, coming from exactly the overnight distributions here. These three clusters, three high. There's no excess here, no excess here. This one is just too little from this high here, from these highs, particularly from this one. Very emotional day, poor high here. No, it's a tremendous amount of weakness on the upper side as well. Right? And inventory is very short now. Now we have a 3-day range. Right? Shorting should be the last thing I will be thinking now. Shorting this market. There's directional move here. Now, and this market is having upside continuation. This level has been taken. This weak level has been repaired. Now we have another distribution. Notice where it's buying. Where this market is buying from. Exactly from this high here. It's an indication what kind of traders, right? What kind of traders are behind the movement. Now this is a weak high from this day. The odds that this high is going to, this is going to be the high, or today's highs are not that good. Really, are not that good. Now, we may have some location here. This can be a good location here as well. And the 5100 has been reached, right? An area where usually is an area I don't trade. I just let the market do its thing. This because these levels have the tendency, right? Traders give a lot of relevance, to these levels here. There's some back and forth from these levels. Nasdaq has a 4 high cluster here in this area. Now there's 5, including today. So the odds that this is going to be today's high are not that good. And also, it is so right now it's a very emotional market now. There's a very emotional, very thin. Actually, 2 distributions now. Upside movement, range extension in the first 7 minutes. And what I am doing here, I am monitoring the market. Now, let's check again the daily. 2, 4, 6, 8 day range here. Look at this. And coming from this range, failing to trade to the opposite side of this range. Another potential range forming here, which can be the potential destination of this movement, maybe this high. and correction on this high because there's no excess here can take the market to the 50, and we have three highs together here. I'm not saying that's going to happen, but these levels are to monitor for continuation here. The ES has this high, and look at this movement, man. I don't like the Nasdaq. You know, I really don't like that market. Okay, unless I have any questions, I guess I'm going to call it a day. No, we have so far we have a trending market. I don't want short a market that has momentum. I don't want short a market that's trending higher. Okay, don't step in front of, or don't step in front of a trend. You know, the odds that are going to be crash are high. It doesn't mean that the market, and the thing is, a lot of the traders remember what happened yesterday. Oh, we have a nice pullback round, nice pullback low, right? A weak pullback low down here, about exactly from previous year. This is an important reference also. You know, this is an all-time, this is a yearly high, another time frame here, right? Exactly to this low here, and this is, I guess when we had this movement during K, we mentioned that this kind of movements have a tendency to mislead traders, right? These mislead traders take this, mistaking this kind of rebalancing of inventory with something more serious, There was some range. I thought yesterday that the market may come down here, maybe around this area, or maybe around this 100. It didn't. All right. So I didn't have any bias today. I really didn't have any bias, any kind of preference to the market for this market. But I'm noticing here it's very emotional now. 3 periods, 2 distributions already. Right? Very thin market, very emotional. Emotions are running high today. Now remember, we said as well that there's nothing here. You know, this upper side of yesterday's, this upper side is half upper side of what day is this? This is Thursday, and this upper side on Wednesday as well. There's nothing here. Let's see the other days. 23. Let's do 20. Oh, I hate this. What is happening again? I'll need to restart my window trader. Look at that. There's nothing here, and this is a very thin day as well. You know, very highly emotional day here. Really emotional day. And what do we have here? There's nothing here. Nothing here that can hold this market. You know, and this is actually some sort of 2 distributions here for me here. One on the upper side. We have one here. I guess we can use the daily chart here. Yeah, there's a big distribution here, right? Yeah. Oh, look at that. Huh. Look at that, man. Let's open this. We have something here, actually. And there can be something here. Okay, this, what the heck? Okay, I'm going to have another one here. I have a range here, actually. No, I'm going to use only this one. Can you see this? In the daily time frame, potential coming, forming 2 distributions. We already, if this one has some selling from this area, on this high, on this range, potential 6-day range forming here, we will have two distributions here, one on the upper side and one on the lower side. Okay? So the next thing, if this happen, okay, this is conditional. If this happen here, if today the market takes this high, there's some selling. The next thing I want to see if these distributions are closed. If these distributions are closed, closing this distribution, coming back inside this range, can actually target the opposite side out here. Right? But if it comes back in and if there is rejection and the rejection takes the market back inside this one, the potential destination can be actually the opposite side of this range. Something similar to what is happening. Yes, guess what? Yes, you guessed it. Something that's happening in Nasdaq, in the Dow. Right? We have the Dow, we have this range in Dow. I have this high here, have this low here, and forming and getting a range here, right? This market got back inside this range, but there is nothing here, right? There was no acceptance of this range. There's no two distributions here because this high actually closed the gap. There's no single prints, and this one also is just different. That's the difference. There's a gap here. This is daily. I'm going to move this up here because this is a gap. I'm going to duplicate this. I want to remember these kind of things. The range is in here. Oh, look at this. This range has already have a breakout and was retested here 3 times. 1, 2, 3 times was retested. There was no acceptance, and now his has been retested and it has been checked not 3 times but 5 times, right? 5 times here. Obviously there is something going on here. And also this happens to be, I'm going to extend this to the right. This happens to be 2022. I need to know this 2022 high, which is 38,089. 38,089. Okay. I want to put this on the right. All right, there's something here. Okay. And this is the really how important. This is why stair steps are so important in markets, right? When markets don't have stair step, they don't have support. Right? If I check the ES doesn't have that. The ES have some sort of range way down here. This is the only one, you know. And in a similar fashion to Dow, you know, look at that, right? Right at 2022 highs as well. This is crazy. But the really interesting things that you can see. Right? And this is the technical part, okay? This is the technical part. This is part of the homework. This is part of the homework I do every day. And that will give me some form of context, okay, to what is happening right now. Very weak rally, man. Very weak rally. But so were these breaks as well. All right. Okay, my friends, if there's no questions or comments, I guess I'm going to call it a day. I wish you a wonderful rest of the day. Stay safe. Hope I can see you tomorrow. Bye bye. Oh, before I go, the market that is trading in sympathy today, for me, today looks like the market is trading in sympathy today is the Dow. Okay, so be careful with that market. All right, see you.